Is the US-Japan alliance in trouble? A closer look at rising economic tensions. Could the long-standing economic partnership between the United States and Japan be heading toward a rough patch, or worse, a major shift? Recent events suggest that the relationship between these two powerful allies is becoming more complicated, particularly as financial and trade disputes escalate. One of the most notable flashpoints came when a Japanese company attempted to purchase a US steel firm. Washington intervened and shut the deal down, citing national security concerns. But to Japan, this move felt less about security and more about America protecting its domestic industries at Japan's expense. Frustrated and feeling unfairly treated, Japan decided to take legal action against the US, adding another layer of tension to an already strained economic relationship. This steel industry battle is only part of the equation. Another critical issue is Japan's decision to reduce its holdings in US debt. Combined, these developments have left many wondering. Is this just a temporary disagreement, or are we witnessing a deeper shift in the US-Japan alliance? But here's where things get even more interesting. Japan isn't the only country making these moves. China, another key player in the global financial system, has also been cutting back on its US Treasury holdings. A decade ago, China held approximately $127 trillion in American debt. Fast forward to late 2024, and that number has dropped by nearly 40%. Japan, too, has reduced its holdings, though not as dramatically. The fact that both Japan and China are rethinking their financial strategies suggests a broader shift in global economic power. While these two nations have had their own tensions in the past, they've actually been moving toward closer cooperation in recent years. A recent meeting between Japanese and Chinese diplomats underscored this shift. The two sides agreed to engage in deeper discussions about security, trade, and other significant issues. They even planned a high-level economic summit in Japan for 2025, focusing on critical areas like clean energy, healthcare, and conservation. On the travel front, Japan is easing visa restrictions for Chinese visitors, allowing them to stay longer and travel more freely. This move followed China's decision to relax visa rules for Japanese travelers, a rare moment of cooperation between two nations that have often been at odds. Of course, not everything between Japan and China is smooth sailing. One major source of tension has been Japan's controversial decision to release treated radioactive water from the Fukushima nuclear disaster into the ocean. The move sparked outrage in China, which responded by banning imports of Japanese seafood. However, in September 2024, both countries agreed to allow international monitors, including Chinese officials, to conduct independent tests on the water, supervised by the International Atomic Energy Agency. If the results confirm Japan's claims that the water is safe, China may reconsider its import ban. All of these shifts bring us back to a crucial question. Why is Japan pulling back on US Treasury investments? And what does it mean for the global economy? For decades, Japan has been one of the largest buyers of US debt, holding trillions of dollars in American Treasury bonds. In early 2020, Japan's investment in US debt hit an all-time high, reaching nearly $129 trillion, making it the top foreign investor in US government bonds. But then, things started to change. By 2021, Japan's holdings dipped slightly to around $1.25 trillion as the world was still dealing with the economic fallout from the COVID-19 pandemic. Initially, this drop seemed minor, but by 2022, it became clear that something bigger was happening. By April 2022, Japan's investments had fallen to $1.28 trillion, the lowest level in 2 years. So, what was driving this shift? Several major factors were at play. First, Japan was facing economic challenges of its own, including a weakening yen and persistent deflation. To stabilize its economy, the Bank of Japan, BOJ, focused on maintaining low interest rates while also supporting its local bond market. In simple terms, Japanese government bonds, JGBs, started to look like a better investment than US Treasury bonds. By 2023, this trend was accelerating. Japan's US Treasury holdings had slipped to $1.38 trillion by the end of the year. Major factor behind this decline was the aggressive interest rate hikes by the US Federal Reserve. As US rates rose, it became more expensive for foreign investors like Japan to hedge their risks. This made holding onto US bonds far less profitable than before. Fast forward to late 2024, and Japan's investment in US debt had fallen even further, dropping to $1.98 trillion, a decline of over $101 billion since 2013. But this wasn't just about finding better investment opportunities elsewhere. Japan was actively selling off US bonds for a very specific reason: to protect its struggling currency, the yen. In April 2024, Japan made one of its biggest moves ever to stop the yen from weakening too much against the US dollar. To do this, it sold a massive amount of US Treasuries and used the proceeds to buy yen, hoping to stabilize its value. This wasn't just a minor adjustment. It was Japan's largest single-day currency intervention in history. At the same time as Japanese government bonds started offering better returns, major financial institutions, such as pension funds and insurance companies, shifted their money back into domestic markets instead of US investments. Beyond just managing its currency, Japan's financial strategy is evolving in another key way. It's no longer relying as heavily on the US as its primary financial partner. Instead, Japan has been strengthening its economic ties with China and other Asian nations, signaling a shift in its global financial strategy. This isn't just about diversification, it's about financial independence. For years, Japan's economy has been closely tied to US monetary policy. But with Washington making unpredictable economic decisions, Japan sees an opportunity to reduce its dependence on American financial markets. By spreading its investments across different regions, including Europe and Asia, Japan is positioning itself for a more stable and self-sufficient economic future. However, this shift has consequences for the United States. Japan has historically been one of the biggest buyers of US Treasury bonds, and its pullback could make it more expensive for the US government to borrow money. With America's national debt continuing to climb, losing a major foreign investor like Japan could create significant challenges for Washington. If other countries follow Japan's lead and reduce their investments in US debt, it could send shockwaves through the global financial system. Meanwhile, tensions between the US and Japan are heating up in other areas as well. The steel industry dispute is a perfect example. In December 2023, Japan's Nippon Steel announced plans to buy US steel for nearly $15 billion. The deal would have positioned Nippon as one of the world's largest steel producers, while keeping US Steel's headquarters in Pittsburgh and maintaining labor contracts with American workers. However, in January 2025, the Biden administration blocked the sale, citing national security concerns. The White House argued that steel production is a crucial industry for US defense and infrastructure and should remain under American control. Japan was outraged. Nippon Steel and US Steel quickly sued the US government, claiming the decision was politically motivated and unfair. Japanese officials called the move incomprehensible and warned that it could damage economic ties between the two nations. While the US government stood by its decision, American labor unions and domestic steel companies celebrated the outcome, arguing that foreign ownership of US steel would have weakened American industry. But this steel industry battle is more than just a business dispute. It's another indication of the growing friction in US-Japan economic relations. Looking at the bigger picture, Japan's recent financial decisions and economic maneuvers are reshaping its relationship with the United States in ways that go beyond trade and investment. On one hand, Japan is gradually reducing its holdings of US Treasury bonds, signaling a shift in how it manages its financial assets. On the other hand, a major business deal between a Japanese company and an American firm was blocked by Washington, fueling further economic tensions. With these developments unfolding, one thing is clear: the economic partnership between the US and Japan is changing. Whether this leads to a long-term divide or simply a temporary period of friction remains to be seen. But as both nations navigate these shifts, the future of their alliance is anything but certain.